With home buyers facing a possible interest rate rise before the election, it now looks like rates could keep rising into 2012. That's according to the latest business outlook from Access Economics. It's bad news for states like New South Wales, which are among the nation's worst economic performers.
Global interest rate pressure won't be coming from here, a US economy that's still very fragile. Thousands of desperate homeowners turned up to a mass meeting with their bankers in Washington, pleading for more time to pay their debts.
We've been dealing with this issue with our mortgage company for over a year now, so by this time we've
ready to throw in the towel.
Yeah, we're ready to get rid of it anyway.
The US doesn't have a resources boom on its doorstep, so the American experience won't count for much when Australia's Reserve Bank meets to consider an election interest rate hike next week.
The economy seems to have softened a little bit, but remains on a healthy track, and those inflation risks remain, and that'll keep the RBA on alert.
Access Economics' latest business outlook probably isn't what mortgage holders want to hear. The forecaster says rates will continue going up for the next 18 months. That's a problem for the biggest states. Queensland and New South Wales are in equal last place, according to CommSec's latest state ranking survey. They're suffering from slower population growth, the slump in financial services and tourism. The pack is being driven by a mix of strong investment, solid population growth and housing demand, while Western Australia and the ACT are the strongest performers thanks to the resources boom in the West and housing in the ACT.
Well, certainly interest rate hikes would be a major problem for a number of states, those which are driven very much by the housing sector.
The RBA always says rate decisions aren't driven by any one sector or any one state. It's the sum of the parts that